Hello and welcome to my take on your Daily 5 for November the 19th. My name is Julius de Kempenaer and it is my turn to host today's show. In case we haven't met yet, I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs, or RRGs as they are commonly referred to. You can find my contributions in the RRG blog on the site. If you would like to be kept in the loop on everything that has to do with sector rotation and relative strength, please subscribe through the link below each article. Every Tuesday I host the Sector Spotlight Show from 10:30 to 11 a.m. Eastern. Again, if anything related to sector rotation, relative strength has your interest, please tune in or watch the replays on the StockCharts YouTube channel. I do enjoy the interaction with viewers and readers, so if you have anything to say, please do so in the comment section below articles and videos. But for now, let's have a look at what I have found for you today. I'd like to start with the RRG for US sectors. That is my common starting point. And if you have heard any presentations of me before, then you may have noticed that one of the things that I try to stress to people is that it's maybe even more important to know where you should not be invested than to focus on where you should be invested. And I think that's particularly the case right now. If you look at the RRG, there is a pretty clear message on where you should not be. And for me, that is communication services, the sector that had just crossed into the lagging quadrant, and technology, the sector that has outperformed tremendously in the past and is now rotating through weakening and rapidly heading towards the lagging quadrant. Discretionary is following suit, but technology is more prone, more important, I think. So these are two sectors where I think that we should really avoid them. Now, another interesting observation is if we zoom in on the rotation of those two sectors, communication services and technology, and we add RYT, which is the equal weight technology ETF, to the mix, then we see something interesting. We see that that one is much better positioned than XLK. It's actually pushing into the leading quadrant because the heavyweights of Facebook and Microsoft and a few others have been taken out. So that's an interesting pair trade right there, RYT versus XLK. And then we have XLC moving into the lagging quadrant. And if we take a quick look at the chart of XLK, you see that it was not able to break out of that consolidation pattern. We have 3 tests of that overhead resistance level and we failed. Which makes the odds of going back for a test of the lower boundary pretty big. You also see that on the rolling over situation in the relative strength line, and that weakness, that loss of momentum, was already picked up by the RS momentum line over the summer, and it's now rapidly dragging RS ratio lower, which is pushing XLK towards the lagging quadrant. If we compare that with the equal weight equivalent, which is RYT right here on the RRG, you see that this one was actually able to break up out of that consolidation and move higher, and it looks as if it's about to do that on the relative strength line as well. That's pushing those RRG lines higher on RYT. Now, if we look at communication services, XLC, then you see that it is testing that overhead resistance, but relative strength is not following, and it's actually pushing the RS ratio line below 100 and moving into the lagging quadrant on the RRG. What I want to do is dive into the communication services sector and see what kind of interesting rotations, and then especially where we should not be, because one of the major stocks we all know inside communication services, the main drivers, is Facebook. Now look at the rotation of the communication services stocks, and especially Facebook, on this RRG. It's inside weakening, rapidly heading towards the lagging quadrant. And if we put that on a regular chart, we can see that weakness. Facebook failed to push higher. It actually put in, depends a little bit on how you draw your lines. I'd like my horizontal lines, but it is a lower high if you want. And we're now moving lower. So there's a few support levels, a few previous lows in this shallow rising support line. If that breaks, I expect an acceleration lower. And you also see that in the relative strength line, it's not able to push higher, and you see that it's it's losing that momentum, which is depicted by the RS momentum line that's moving lower. So I'm putting some caution on the Facebook chart, on Facebook's rotation. If we do the same on technology, there are a few very interesting negative rotations, I should say. And the first one is Adobe, ADBE. If you look at that one, if you look at the trail on Adobe, it's rapidly heading towards the lagging quadrant. And if we put that on the regular chart, you can see that it has lost its momentum. It's rolling over on relative strength, dragging those RRG lines lower. And if we look at the price chart, you see that that steep rising trend line is already broken, and you see a new series of lower highs and lower lows emerging. I think that when Adobe breaks below that 440 level, that could accelerate the down move and accelerate the relative strength weakness, pushing it into the lagging quadrant. Second technology stock that I want to put your attention to is Intel, INTC. If you look at that rotation, it's inside improving, but it's now starting to roll over, and look how far away to the left that is. It's a strong relative downtrend. So if we look at INTC, Intel, on the chart, this worries me. This is a long-term support line. It's just above 42.5, maybe 43, but look at relative strength. That move below, that's 4-year lows, maybe even 5-year lows. That's serious. So if we get a break below this long-term support level on INTC, I expect a rapid acceleration lower, and that's not going to help relative strength versus the S&P 500, and that will push INTC back lower on the RRG into the lagging quadrant. Now, another negative one, I keep warning you, these are a few picks that are showing me some worrisome rotations. Oracle also inside the improving quadrant, but rolling over already. And we know that that is a negative sign. If something rolls over inside improving without hitting leading, that is usually a bad sign. So if we look at Oracle, then we can see a very weak relative strength. It's breaking below multi-year lows. That's a 5-year relative low versus the S&P 500. And you can see that there is a new series of lower highs and lower lows emerging, if you wish. And again, if this breaks that rising trend line or below the previous low around 55, that is, or at least I expect an acceleration lower in price and as well on relative strength, and that will push Oracle back into the lagging quadrant. So these are a few stocks inside the technology sector that I think should be avoided, or at least approached with caution. Now, is there nothing positive? Yes, there is. There's actually quite a few. If you go into that improving quadrant, you'll find quite a few stocks that are showing interesting moves and pushing higher. But one that I want to highlight is XLNX. That is actually pushing steep into the leading quadrant, and I do like the chart that comes with it because it's pushing against its all-time highs. The relative strength is moving out of that rounding bottom here. It has just started. RRG lines are moving higher. It's already interesting, especially when it moves above that resistance around 135, 140. Then it becomes a super interesting stock. That was it. It concludes your Daily 5. Thank you for watching so much. I hope you enjoyed the presentation. If you did, you know what to do. Please give it a thumbs up. For now, stay safe and be careful with your investments. I hope to see you soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.